The longest weekly losing streak in the last 5 years. That's what we have seen in the market this week. And it's been a continuing string of losses. The Nifty falling almost 1%. The mid-cap index underperforming. The small-cap index down almost 1.5%. That's how the tally stands as we kick off this week's edition of the Editors Roundtable. Lots happening. The biggest headlines are coming in from the US, and 50% is that one number that you would have heard, or that one phrase that you would have heard over and over again. Where does this 50% tariff really leave India, the economy, and more importantly, the market? Are we close to the bottom, or is there a bigger downside opening up? Well, that's what we're going to be discussing on this week's edition of Editors Roundtable. I'm Surabhi Upadhyay. With me, as always, Nimesh Shah and Nigel D'Souza. And to help us make sense of all this tariff chaos, we have with us Ravi Dharamshi of ValueQuest Investment Advisors. Ravi, great to have you with us in our newsrooms. You've picked a great week. You know, the most newsy week I think we've seen since the 2nd of April, actually. So glad you're here.
Yeah, you know what? You said that I'll help you make sense of it. But honestly, nobody can make sense of it. And whatever is there today won't be there tomorrow. So there's no certainty to anything over here. I think clearly these are all negotiating tactics, and they want us to give in on some things. And once we do, it will settle down at a lower number. But until that happens, I think this uncertainty surrounding this whole thing is going to kill the business in the meantime.
No, I know, absolutely. You know, I was remembering this week in the morning, one of the days, Prashant said that if I was a betting man, and he's not, but he said if I was a betting man, I would bet that this 50% is not going to last. But last count, Mr. Trump has said that hame baat nahi karna hai. We don't want to negotiate. So
well, there is 21 days, right? So give some time. Something could come up. But you know, he's working the reverse psyche. After 25, he said another 25. Look what today Gokuldas said. He said, I'm happy with 25%. Had it been only 25 first, he would have said, I've been happy with 15%. So he's really playing with the psyche of the investors. Ki, "Achha, theek hai, aur bolo, to thode kam mein." He'll get what he wants, right? So I guess even 25 is going to be very difficult, isn't it, Ravi?
No,
for a lot of
I think it should be. I would expect, or rather, I would hope that it is less than 25. It should be closer to 15%.
Sure.
See, it's a relative game. We have to be better than the peers.
The peers, exactly.
And for that, we need to be better than Vietnam, China, Pakistan, Bangladesh. Those are the countries where what level they are, and we need to be better than that. So from that perspective, I would take anything more than 20% is a challenge for India, for sure.
You know, on that note, actually just allow me to quickly hop across to the wall, because I was looking at the comparative rates, where we stand, and some of the implications that are out there. Because it's, you know, this 50% on us, and by the way, it's not as if we are running the highest trade surplus with the US, not at all. Our trade surplus is around 46 billion. I mean, China is over 100. I'm not even talking about China. Let's forget China. Let's look at countries like Vietnam. Even their trade surplus with the US is much, much more. But we've gotten the raw end of the deal very, very clearly. Just want to talk about what has happened with respect to geopolitics, because that's become very important for the market. We all remember Thursday, right? The moment that news trickled in of possibly some, you know, meeting between Putin and Mr. Trump, we saw the short covering in the market.
No, so we'll get back to that piece, Surabhi, that you're going to be putting out in just a bit from now. But, you know, for the markets, what's worrying the market? The domestic economy is quite soft. Earnings are yet to pick up. And these Trump's tantrums have now turned into tariffs, you know, because earlier he was, you know, every day you woke up to something. Now, this week, actually, the direction was clear. 25% became 50%, and there's no U-turn. But I would have to bet with Prashant on that one, you know, even though I'm not a betting man. But I think in the next 20 days, there'll be some softening of stance from this 50%. That's the hope, at least. You know, from a technical perspective, what are you hoping for? The PCR has come down to 0.7 by the time we closed up today. The FI net shorts are the highest that we've seen since March 2023. And the India VIX, with a correction from around 26,000 odd all the way to around 24,500. The India VIX is still pretty much okay, well, decently behaved. You know, otherwise, you've seen the VIX shoot up to the high teens, which hasn't happened in this case. The problem is we require some kind of good news from somewhere, because that's missing, and on a day-to-day basis, then if he's making lower lows. You know, how would you, you know, look at this market, Ravi? You know, if a lot of retail audience out there, they're getting a little bit panicky now, because it became so easy, right? You have some bad news, you buy, it'll recover. Now you're getting follow-through on the downside. This market needs to stop falling first, then we hope for a bounce.
No, I think you summarized it very well. The positioning is very, very extreme right now. So what we need is a positive trigger. I think it's an unfortunate timing from that perspective. The economy was getting soft, and probably we are at the fag end of the softening of the economy because the steps have been taken by government as well as RBI. But those steps take time to percolate it down into the economy and into the earnings eventually. So we're probably a couple of quarters away from that. But in the meanwhile, this uncertainty has created a whole new dimension to the market, and which has caused the markets to come down. So I do believe we need clarity. It might not be the best deal for us, but at least we need clarity. We cannot afford having this linger on till the end of the year. We want clarity in the next, we need to have clarity in the next 1 month. And we need to now actually really work hard in opening up the other markets, whether it's EU or other market. And it might be so that, because we had a tough deal with US, we might actually be a little lax on the other side. So one action will have its other reaction. But what we need is clarity and opening up of markets so that we can get on with business as usual. And the steps taken by RBI should eventually result into economy picking up by the end of the year, is what I feel.
Ravi, the one big support for the Indian market was the retail money. But now it's not about 1 day, 1 week or 1 month. 3 months, 6 months, almost a year now, we're coming to a negative return or a flat return. Is that a bit of a risk now that the domestic liquidity will, somewhere find it fatigued and there could be a bit of loss of momentum from that side? Are you getting that sense yet, talking to a lot of...
There is clearly a loss of momentum. Yeah. I won't say that... See, we are not going back to the old ways where there will be complete stoppage of SIPs or retail money will not flow in. Yeah, maybe the chunky money might not come in at this point of time. They are more going to be opportunistic. So if they see market performing, they'll come back. But the more sticky one, I think there will be a base at some point of time and it should support. And even the foreign money for that matter, I think we are at a 15-year low in terms of the equity holding. I do not believe that they are going to, sell off 2-3% of the equity or something of their holding over here. So technically, it looks like we are at a very, very extreme positioning in the market. But we need a fundamental positive trigger for us to start moving up. Valuations have become reasonable as compared to the other markets because we have seen Europe, some Asian markets also perform. We used to quote a 2 standard deviation premium to the other markets. Now it is more closer to the long-term average than it has been in the last 5 years.
So at least from that perspective, that's a silver lining, that at least we're not
valuations are far more palatable in comparison to what it was.
What it was about a year back, absolutely. Specifically on pharma, Ravi, and you've obviously done so much work over the last many years on this, right? And again, it's a big question mark. We don't know. He's going to raise tariffs, but he said he'll do it gradually. Eventually, he's saying 250%, but we'll see. Should investors be worried if they have a lot of exposure to pharma?
So, see, first of all, let's understand what US's problem is. They want to bring their costs down in general. It's an economy that has been propped up by debt, and all that debt, healthcare forms 15% of the GDP, and it is growing at double the cost, double the rate at which GDP is growing. So, it's healthcare costs, they absolutely need to bring it down. Of course, drugs is a very small part of it, but still, even that will hurt, and that will hurt directly the consumer. So, India and China are the source of cheap drugs for US, and if they do not, if they put this kind of tariff, it is eventually the US consumer that is going to suffer. Yes, there might be some hit that the manufacturers over here will have to take. And if you're talking about these steps leading to supply chains moving, it's not going to happen overnight. It will take 10, 20 years. So in the meanwhile, you'll end up hurting your own economy. So I don't think it's a permanent shift that is going to happen. But incrementally, everybody will say, I'm putting up one new plant. Like Apple said, I'm going to invest over this much. They'll show their intent. And of course, then it will depend on in the next election what happens. They are not going to commit or spend their entire amount right now. But yes, in the meantime, in the short run, it will create uncertainty and it will lead to uncompetitiveness on the part of Indian manufacturer vis-a-vis other countries. That remains a challenge.
But you don't see an earnings threat or a fear or any sort of further downgrading?
See, the bigger problem in the pharma is the approvals, right? I mean, if they want to buy from somewhere else, there should be a source available from where they can procure it.
Sure.
If that drug is not available anywhere, what will they do? They have to buy it from
the tariff will be passed on.
It will be passed on, and they will. So it will boil down to how strong the competitive advantage of that particular company is in that particular product, and that will determine their ability to pass on the cost. At a country level, India's strength is very, very good in pharma. especially in the API and the formulation space. So I do not foresee any country taking away any significant market share. And China also, as I understand, at this point of time, at least it's still comparatively disadvantaged only in terms of tariff. So I don't see a major shift. It's just probably inflationary for the US healthcare cost.
Correct. Ravi, a couple of sectors I want to ask you. The first is on EMS. We saw a big accident today in terms of PG sharply cutting down the guidance. I'll just run through the valuations as well. Dixon is still trading at 58 times, Keynes is at 56 times, Evlon is trading at 42 times, Amber is trading at 46 times. You played this theme very nicely in the last couple of years. Stocks are up 8, 10, 15x as well. At these valuations, kind of challenges which are coming across, what's your take on the EMS space? A buy or a avoid?
So we are completely out of this space.
Achha, okay.
It's been a while since we are out of this space. Stocks have done very well after that also.
Okay.
But as you rightly mentioned, number one, the multiples are not favorable.
Sure.
See, when you are looking at the multiples, two things to keep in mind. An absolute 45 times or something might not mean expensive or cheap. But in comparison with the growth, in comparison the stage of the cycle, you have to see where the multiples are. So if these companies continue to grow at 40-50%, those valuations might sustain. But if they are not going to grow, clearly there is a problem. And I do feel that at this stage, if you are entering, then you carry that risk. Sure. That if there is like what happened in the case of a company.
What was the trigger for you guys to sell it out?
I could not justify. See, for me, it's always easy. If I cannot justify a doubler in 3 to 5 years time frame, then I'm carrying more risk than reward in my portfolio.
Sure.
So the idea is that it was a stage at which stocks had run up. They were factoring in 3 years forward in terms of valuations. You can give it a little bit longer rope when it's a nascent industry. But now it is a well-recognized industry. Everybody, a lot of money has flown into it. Sure. Making money from the next 2-3 years point of view, I feel is going to be a challenge in this space.
Is that going to be the case with the defense stocks as well? Again, a lot of big momentum has seen. We've seen big rallies, but the numbers are not coming
mostly horrible Q1 numbers.
Exactly.
So most of them.
Chalo, that is a bit of seasonality in defense, but still, from a medium-term perspective, you think most of the good news is price change rally is done with in the defense space?
I am pretty much out of the defense stocks also. Okay. But however, I do feel the problem in defense valuations is to a lesser extent as compared to the EMS space. And that business is far more defensible than the EMS. Okay. See, over here, one customer going here, there can make a big difference in electronic manufacturing. But in defense, in today, there are virtual monopolies. There is only one guy to whom orders for frigates are going to go or light combat aircraft. There are only few guys who manufacture this. So the entry barriers as well as the exit barriers are quite high. So it is probably, over there, I feel it will be, the price correction can be to a lesser extent, or there can be a time correction. Yeah. But these electronic manufacturing companies definitely are, there could be landmines over there.
All right. Ravi, I wanted to ask you about the renewable space. And solar as a theme is something that you like, right? There's solar cells, modules player, solar pumps as well. Those are a couple of segments that you like. Tell us the rationale out there, because the street is divided out there as well. You have a very, very bearish view that's coming in there, and you have a very bullish view. Some believe that it's run its course. You believe there's further potential?
See, I don't think it's run its course. It was only in April 24
I'll ask you in a simpler way. You spoke about two sectors you've completely exited.
Yeah.
The third sector, which we asked you, you're very bullish on. Are you still holding on?
Absolutely.
Perfect. So that's an answer that you're still bullish on.
Yeah. So
now explain
the simple answer is yes. Of course, we are holding on.
Yes.
The reason I believe we were still at the beginning of the cycle. It was only in April 24 that ALMM got introduced, which is that you can buy only from this list. Now government is coming on with ALMM 2, which is essentially the cell manufacturing part of it, and eventually they will go to wafer and polysilicon as well. So the idea of government is to ensure that these companies make money so that they can backward integrate, and we finally have our own supply chain which can stand up to China someday. So that being the hope, I don't think these tariff and non-tariff protections are going away tomorrow. They are here for at least 3-5 years. So from that perspective, you should not be so worried. Yes, theoretically, if they were to go away tomorrow, there is a risk to the business model. But if you think of it, the energy independence and energy security are two big strategic reasons why we should not, open this sector up. And from that perspective, I think it is well protected.
Okay, so renewables gets a thumbs up from Ravi. We'll find out which are the other sectors that he's bullish on. That after a very quick break. You're with us on Editor's Roundtable. So what has this 50% tariff on India meant for the market and what lies ahead? Let's take a look. Now, first of all, let's look at the 50% number itself. India has been handed out the highest tariffs in the world, next only to Brazil. And it's not as if we're running the highest trade surplus with the US. I mean, look at, that's why I put up this number. These are some of the trading partners of the US which are running very high trade surpluses. In fact, look at China. I mean, 296 billion. Vietnam is at 123. The trade deficit the US has with India is just $46 billion. Despite that, our tariff at 50% is obviously among the highest in the world. So that's point number one. Now let's move on and talk about what has happened, because geopolitics has become very, very interesting and very, very important. What has happened so far? In the last 24 hours, what we've heard is that Mr. Trump has said that there'll be no further negotiations with India till issues are resolved. He seems to be pointing out towards the Indian purchase of Russian oil. Number two, we know for a fact, with confirmation coming in from Mr. Doval, that the Russian president, Mr. Putin, he's going to be making his way to India. Very, very important development as well. Number three, we've seen a phone conversation with the Brazilian president and Indian Prime Minister, and talks were apparently covering a whole range of issues, including, of course, tariffs. In fact, Mr. Lula is expected to make his way to India on a state visit in 2026. And number four, Prime Minister Modi himself is going to be traveling to China for the SCO summit. And this is assuming a lot of significance, because in all probability, he will be holding a bilateral meeting with his Chinese counterpart. And this is the first meeting in many, many years. So the voice of the BRICS seems to be rising again. These overtures are very significant and important. Now, the market is in a wait-and-watch mode. It is waiting for a breakthrough. First of all, in that meeting between Donald Trump and Mr. Putin himself, because if that happens, then the market's hope is that at least that additional 25% tariff, that perhaps can be knocked off. But it's a if at this point in time. So what does this mean for the market? Let's look at some numbers. The Nifty is down about 1% this week. The mid-cap index has fallen about 1.5%. Now, what happens if all of India's exports get tariffed at 50%? Morgan Stanley has done an impact analysis, and they're saying is if everything is tariffed at 50%, then the impact on GDP growth is going to be 120 basis points. But if the exempt categories, such as pharmaceuticals and some electronics, if they continue to get those exemptions, then the impact on GDP growth is going to be lesser, only 80 basis points. Now, why is the market so worried if the GDP hit is only 80 basis points? Here, the answer comes in flows, and the picture on FPI, inflows and outflows is not looking very good. In July, we were out by almost 18,000 crores. So far in August, 12,400 crores. And so far in the calendar year overall, we've seen outflows of over 1 lakh crores so far. So that remains the biggest concern. Something highlighted by Novama in one of their notes. I'm just recapping that for your benefits. For instance, this one brokerage says that the capital flight is likely to weigh on the SMID space, in particular small and mid caps, and that remains the biggest risk for the market. And Ravi, that's really my question to you. FPI outflows, is that a new risk? Ravi, yeah, that question to you. FPI outflows, I mean, we'd want to wish it away, saying domestic inflows will counter it, but could it still be a new risk the market has to look at?
No, clearly they have, FPI flows have not stopped going out. And there was for a brief moment, there was a period where it looked like the US exceptionalism was ending and money would flow towards emerging markets. But what has happened is money has flown towards selective European market, selective Asian market, not as an emerging market overall. So India got money in one particular month. I think in the month of April or May, it got big flows. Yeah. But after that, again, it's the same thing. And relatively, India's position has worsened in the trade war. So that has led to the outflow. So I don't think we are carrying a huge amount of FPI risk, FPI outflow risk, because their holding has come down from 24% to almost 16%. And can it go down to 15, 14? Sure, it can. But it's not going to be the same as 26 coming down to 15, 16. So I think it's less of a risk, but we are lacking triggers. We are not the most attractive bride out there.
Well, let's talk about what can make the bride attractive. You mentioned one attractive piece, which is the solar space. What else?
I think reforms. Reforms is what is needed. We need to press the pedal on reforms. We cannot be expected to, continue on this trajectory. India as a story always has had big bang reforms at a regular interval for it to carry the momentum forward. And I think it's been a while since we have had that. So, and if we are not going to provide a demand side stimulus, at least unclog on the supply side as much as possible and make it attractive for the money to come in. So, honestly, that's what reforms would what make it Indian market attractive.
Two, three things that you can mention, that you are looking forward to in terms of reforms, which can really just change the dynamics and put India on a radar.
So on the access to the market side, we need, actually it was our need. So a lot of people say that, the current GDP, not much impact because of trade war. No, that doesn't matter. What matters is we are all counting on us going from, being a 1-2% of the global trade to 5% of the global trade. And if that was to happen, we have to be part of the trade agreements with the largest market, which is US and Europe.
Yeah.
So it is the future growth that is impacted, not the current GDP that is impacted. So we need to become part of those trading blocks. We need to unclog the regulatory jam that we are seeing in a lot of areas, and especially the legal reforms that need to happen. I think there is still a lot of scope for infrastructure improvement and making the processes. I mean, I'll just give you one example from our industry. An FPI wanting to come in still has to fill in a lot of
yeah, they always talk about that.
Even in a gift.
No, even in NRI is struggling to invest into India market. There is a lot of regulations and a lot of checks.
There is a lot of scope for efficiency and productivity improvement. I mean, let me not get into the detail of it, but clearly, I think we are not at par with the rest of the countries who are trying to attract capital. We have to be better than them.
Point well taken, well made and well taken, Ravi. But I mean, these are obviously, they'll happen over time, over medium term, or even if they happen now. I mean,
it needs to happen now.
But as we wait for this to happen, right now the market's big hope is festive season. Consumer recovery, rural recovery, festive season recovery. Do you believe all the corporate commentary that you're getting around this?
No, I think there is going to be some pent-up demand. And again, I do feel that what might disappoint is the extent of recovery. There is going to be a recovery for sure. But is that, will we go from being a 6% growth to a 6.2, 6.3, or is it going to be a 7% growth? That can make all the difference in what kind of...
Which one do you think will it be? Will it be meaningful recovery?
No, I don't think so. I don't think it will be a meaningful recovery. Across the board, not for sure. In bits and pieces and in some sectors it might be good enough. I think we need to let some more time pass and let some time correction happen before we start seeing a new move in the market.
We didn't ask his favorite sectors beyond solar.
No, we asked.
Anything else? Final advice? Any other sectors? Anything interesting you're watching out for?
No, I think the push from the regulator side has to be on increasing the credit growth. And we cannot have 9% credit growth. We cannot have a nominal GDP growth rate of 8%, 9. We need to be growing at 10, 11% in terms of nominal growth, and we need to have credit growth which is 13, 14, 15%. It will take time. Good thing is the steps have been taken, and some more incremental steps should be taken probably. But it is not lost on whether it is the central bank or the government. It is not lost on them. But it's just that we as a market participant are a little impatient. We want these things to happen sooner.
Yeah, I think to sum it up, given that this week is when India bounced back in the test match, I think the wicket is looking a little bit tricky. We can't go for those big hits. Maybe spend some time in the center, let's see that ball a little bigger. Tug in there the 1 and the 2s, and then in fact, as we are informed, then the big hits will come.
Yeah,
so I think
your chance will come.
Your chance will come. That's what you stepping out to, on a green top is going to be very, very difficult. But just thought we'll wrap it up on that note.
That's a good analogy. Preserve your wicket, take in the singles as you get, and then wait for the big hits. Ravi, great to have you in our newsroom. Hope to see you more often over here. Thanks very much for joining in. Well, with that, it's a wrap from this entire team that puts the show together. Thank you so much for being here with us. We'll see you bright and early with the markets on Monday morning. Till then, keep watching CNBC-TV18.